So, hi everybody, this is Hustle Hub. I'm Giacomo. Today I'm with Jason Napodano, and today he's going to talk about a little bit about his research. He's a contributor on Seeking Alpha, and he is an expert in all the biotech in the biotech field. So, please, Jason, introduce yourself. Tell us a bit about what you do, and then we'll jump into the research and into the presentation.
Yeah, thanks for having me. I appreciate this. So again, my name is Jason Napodano. I've been a biopharma stock research analyst for 20 years. I actually haven't written on Seeking Alpha in a while. Now I have my own website called Bio5C, where I post all of my work. I'm an independent analyst. I do research mostly on small and mid-cap biopharma stocks. I write articles. I build financial models. I run a model portfolio based on the work that I do, and it's all available on my website for subscribers for a monthly subscription fee.
Okay. So let's tell us a bit about the presentation that you have done. Let's tell us a bit about the stock and what is the investment thesis behind it.
Sure. Yeah. So this is a name that Cardiff Oncology is the stock that I'm going to talk about. CRDF is the ticker symbol. And let me just stop right there and say, this is not investment advice. This is for research purposes, and everybody should do their own due diligence. But Cardiff is a company that I've been talking about on my subscription service now for probably about 6 months. They had some data in the fall that I thought was very interesting in a disease that I'm going to talk about called colorectal cancer, or specifically something called second line KRAS mutated colorectal cancer. So they had some data in the fall that I thought was very interesting, and I recommended the stock in my service on my website. It was about $5 a share at the time, and for a couple months, I looked pretty smart. I think it went up to about $7 a share. And then they had a data update in January of this year that I think maybe the market thought was disappointing. Some of the response rates ticked down a little bit from the data they presented in the fall. And there's some unanswered questions about the path to market and the timing here. And so the stock got essentially cut in half from where it was in the fall. It's now today at $2.50. And I'm essentially doubling down on the recommendation that I made in the fall at $5 at $2.50. I think obviously if I liked it at $5, I love it at $2.50. So that's the stock, and I think there's a tremendous upside to the name. Yeah, why don't I just like you said, get right into talking about the disease and the data.
Okay.
So the disease that Cardiff is going after, their name of their drug is onvansertib. The disease that they're going after is colorectal cancer, and specifically they're going after a stage of colorectal cancer where patients have been treated in the first line, or the first time they receive medication. They're specifically going after the second line. So these are patients that have progressing in their disease after they've taken first line medication. So colorectal cancer impacts about 150,000 people in the US each year. About 20% of those, 20% of those patients have what's known as metastatic disease. So that's disease that is progressing outside of the colon to other tissues. And unfortunately, when you get to that stage, you have a 5-year survival rate of less than 10%. Now, standard of care for metastatic colorectal cancer is a combination of some aggressive chemotherapies and then targeted agents. And the main targeted agent that might be used in the first line setting is something called cetuximab, which is an anti-EGFR monoclonal antibody. Unfortunately, if you have a mutation in the RAS pathway, something called KRAS, which is a pro-oncogenic mutation, you're going to have basically no response to cetuximab. So Often these patients just get intensive chemotherapy, or they may get a separate targeting agent called bevacizumab, which is also called Avastin. That's an anti-VEGF monoclonal antibody. And what that does is essentially chokes off the blood supply to the tumor. But what I think investors need to understand is that if you have colorectal cancer, metastatic colorectal cancer, and you have this mutation in KRAS, you're already unfortunately starting out with a poor prognosis, because the primary drug that's used in the first line setting, cetuximab, has been shown to be ineffective if you have this mutation. So the primary treatment, besides adding on bevacizumab, which in the US is standard of care, but outside the US is kind of questionable, is intensive chemotherapy. And there's a lot of different chemotherapy combinations that are used in the frontline setting. The one that I found, and again, this is kind of investigator's choice or physician's choice, but the one that I found that's the most common is something called Folfox, which is a combination of folic acid, also called leucovorin, 5-FU, and oxaliplatin. And so these are three different kinds of chemotherapies that the patient might get to try to control their disease. They would also, like I said, get bevacizumab, which is Roche's Avastin. Now, there are alternatives. There's something else called Fulfuri, which is standard in the US, mostly standard in the second line setting. And essentially that's similar to Folfox, except they swap out the oxaliplatin for a different chemotherapy called irinotecan. And if you're a young patient and you're healthy, and the physician thinks that you can handle the most intensive chemotherapy, you might get something called FOLFIRINOX, which is all four of those chemotherapies. But if you're sick, if your metastatic disease has progressed and you're elderly and you're frail, chances are you're not going to get such an aggressive chemotherapy in the first line setting. What I think that most investors, what I think that you need to understand, though, is that in the first line setting, Folfox plus bevacizumab is the standard of care, and about 50% of the patients will respond to that medication, and they'll have progression-free survival, which means your cancer will stop growing and you'll be progression-free on the cancer for an average of about 16 months. Now, unfortunately, when you progress on that first-line therapy, the outcomes become rather poor for the patient, because the second line options are unfortunately not so great. So what I've done in my research is try to find, well, what's the standard of care in the second line setting, or what is the typical outcome that a patient may have if they've progressed on this first line setting. And the way that you do that is you go out to published literature and you start looking at various different outcomes from clinical trials. I found four that I think are very relevant to what Cardiff Oncology is doing. And these are four independent studies that have nothing to do with Cardiff. The Tribe 2 study is perhaps one of the most well-known. This was done out of a group in Italy that you might appreciate. There's a study called RAISE. This was done by Eli Lilly pharmaceutical company. There's a study called EAGLE, which was done in Japan. And then there's the ML18147 study, which was done out of a group in, I believe in France, if I'm remembering correctly. And what they've all found is that if you start on this Folfox plus bevacizumab in the first line setting, and unfortunately the patient begins to progress on that, what they do is they swap out the oxaliplatin chemotherapy for the irinotecan chemotherapy, and they hope to see a response on that different, essentially, chemotherapy regimen. So what we found from just looking at these four studies is that the response rates are rather poor. Remember, I said in the first line setting, about 50% of the patients will respond and be cancer progression-free for 16 months. Well, unfortunately, in the second line setting, that response rate drops down into the low teens, and the progression-free survival, which is what PFS is only about 6 months. So outcomes are rather poor if you've progressed on that first line setting. Now, there's some other alternatives that I think we need to talk about. Like I said, in the US, it's pretty standard of care to get bevacizumab in the first line setting. In Europe, not so standard. So a question that somebody might ask is, well, what happens if you just get FOLFIRI or FOLFIRINOX in the first line setting, and then in the second line setting, you get the bevacizumab, which is Roche's blockbuster drug Avastin. I found two studies. Bevercolor was a study done out of an academic group in France. And then perhaps the most relevant study is this E3200 study, which was done at a lot of top centers in the US, I believe Dana-Farber and Memorial Sloan and Sarah Cannon and places like that. And what they found is that bevacizumab adds about 10% to the overall response rate and can add about 3 months of progression free. So that's important to know, because Cardiff is testing patients in the second line setting that most likely in the US, which would have already had bevacizumab, but perhaps outside the US, not have had bevacizumab prior. So the drug that Cardiff is developing is called onvansertib. It is a polo-like kinase 1 inhibitor. And what PLK does, what this molecule does is essentially inhibit PLK. Now, this is not a novel strategy. There was another company, a rather large company called Boehringer Ingelheim, that was developing a PLK1 inhibitor about a decade ago. The main differences between that drug that has been since discontinued and Cardiff's drug is the half-life. The half-life of Cardiff's drug is only about 24 hours. The half-life is essentially how much of the enzyme activity or how much of the molecule's activity remains after at 50%. So how long does it take to get to 50% effective of that? And Cardiff's drug is about 24 hours. The Boehringer drug was about 5 days. And you may say, well, wow, it was in 5 days better than 24 hours. And not necessarily, because of the mechanism of how this drug works. And I'll get into that in a second. But what I think you need to understand about PLK is that PLK is an enzyme that repairs DNA, and it is overexpressed in a number of cancers. And one, obviously, the one that they're particularly going after is the colorectal cancer, although they do have programs in ovarian cancer and prostate cancer and pancreatic cancer as well. And so the way PLK, the way onvansertib works is, like I said, is it blocks PLK enzyme, and the PLK enzyme is responsible for repairing DNA, repairing double-stranded broken DNA in the body. And you might say, okay, well, that's interesting. Why does that work for cancer? And the way it works for cancer is that the drug that it most synergizes with is called irinotecan, which is a chemotherapy. And like I said, that's the drug that gets swapped for oxaliplatin in the second line setting. And irinotecan is a DNA damaging agent. So it's a chemotherapy that works to fight cancer because it breaks up DNA. And it is essentially like carpet bombing the body, because it's not cancer specific. It damages DNA everywhere, but cancer cells are particularly susceptible to having their DNA damaged because they're replicating so quickly. So it damages DNA across the body, but cancer cells, because they're rapidly dividing and rapidly growing, have more active DNA replication within this cell cycle. And so they are susceptible to a drug that damages DNA. And what happens is, if the DNA is damaged, the cell dies. But what cancer does, and cancer tends to have mechanisms to overcome resistance from drugs, is the cell says, well, aha, if you're going to give something that damages the DNA, I'm going to upregulate an enzyme called PLK that repairs DNA. So what the cancer does to essentially fight back on irinotecan is it just upregulates the enzyme that essentially makes irinotecan irrelevant. So Cardiff's drug works because it shuts that enzyme down. So it's really an interesting approach to treating the patient, because it builds off of the success of a well-known chemotherapy, but it essentially blocks a resistance mechanism to that chemotherapy. And then real quick, about the half-life, obviously you don't want your DNA damaged all the time, right? The whole concept of the chemotherapy is you get in, you carpet bomb the body to damage the DNA. The cancer cells are the most susceptible to that damage. And then after that damage has occurred, you allow the body to recover. We wouldn't be around very long if our DNA was being damaged continuously. So you take this chemotherapy, you damage the DNA, and then you let the body recover. Well, what was seen with Boehringer's drug, which had a half-life of 5 days, was that you were blocking that DNA repair far too long. You want to essentially, if you're going to carpet bomb the body, you want to carpet bomb the body, get in and get out, kill the cancer, and then let the body recover over the next 2 weeks in between the dosing schedule. So Boehringer's drug failed because it was around too long and inhibiting the repair of DNA in healthy cells after the irinotecan was long since gone. So what Cardiff's drug does is it works in concert with that DNA damaging agent irinotecan, and then 24 hours later, half the drug is gone. And then by 48 hours later, another half is gone. And you don't have the toxicity profile of the drug that lingers in the body. So it's a little counterintuitive as to why a drug with a shorter half-life might be better for treating cancer, but it really comes down to the tox profile. You want to make sure that you're hitting the cancer and then letting the patient, everybody knows chemotherapy is obviously very toxic and very difficult for patients. And so you want a drug that works and then gets out of the body. And this chart right here shows the synergy of onvansertib and irinotecan. Now, this is a preclinical model that shows tumor growth. And what you can see right here is if you do nothing to the tumor, it just grows like crazy. If you give onvansertib, you get a little bit better result than doing nothing. If you give irinotecan, you get a little bit better result than doing nothing. But if you give both these agents, you really have a nice knockdown of the tumor, and you have a long progression here of where the tumor stops growing. So that's kind of the concept of the drug from a preclinical standpoint. Now, Cardiff is in a phase 1 study, a phase 1/2 study. The phase 1 essentially was designed to show the safety, tolerability, and initial efficacy of the drug, figure out what the optimal dose was, and then move into a phase 2 study, which is where they are now. All right, so this phase 1/2 study that they're doing, what are the results? Well, so far, and this is as updated as of the end of the year, they presented these data in January at a conference called the American Society of Clinical Oncology, GI, specifically gastrointestinal focused drugs. They showed that 92% of the patients achieved what's known as disease control. And these are the complete response. A disease control is anything that's considered a complete response, which is a complete elimination of the target lesion tumor. Partial response, which is shrinking that target lesion. So obviously the colon cancer, you have tumors within the colon. They pick one of the biggest ones. They pick the biggest one, and then they image that to see if the drug is working. If you have a partial response, that means your tumor has not completely disappeared, but shrunk more than 30%. Or they have another thing called stable disease, which means your tumor hasn't shrunk quite 30%, which would signify a response, but it hasn't grown more than 20% either. So you're just kind of stable in terms of your disease. And if you remember what I said, the prognosis in this second line setting is rather low. So yeah, even having stable disease for an extended period of time is nice. Stable disease is being alive without your cancer growing. So it's nice to see that. In terms of the overall response rate, which is a term that we use to kind of look at the efficacy of cancer drugs, they got at all doses a 35% overall response rate. And at this is RP2D, that stands for recommended phase 2 dose. So like I said, in the phase 1 part, they tested 3 different doses of the drug. I believe they tested a 10, 15, and 18 mg dose, and what they found is that the 15 is the best. You're looking for the therapeutic window with the doses. Obviously, you want a dose that's strong enough to affect the cancer, but not so much that it's toxic. So after they do this dose finding in all the patients, they kind of go in and they look at the data and they say, okay, we think this 15 mg is ultimately what they picked is the most efficacious of the dose. This is called a waterfall plot. This shows you all 48 patients that were treated with the drug and shows you the change in the tumor size for all 48 of those patients. So you could see 92% of those patients are between that window of less than 20% growth in their cancer or shrinkage of their cancer. And you can see even one patient, and this is phenomenal because it almost never happens in the second line setting, had complete elimination of not only their target lesion, but no additional lesions elsewhere in the body, which is unbelievable. That's essentially a cure. We'll see how durable that cure is, but that's essentially a cure of the cancer in that patient. And then you had a number of other patients that you see in this green color here that showed what's known as partial response. So these are target lesions that are shrinking more than 30%. And then you had another probably 60% or so patients that had what's known as stable disease. So these are really nice data. Recall, if you come back up to this work that I did that showed what's out there right now for second line patients, it's a 11 to 13% response rate. And so what Cardiff is showing in their study is 34% response rate. So that's almost three times the current standard of care. Which is in my opinion impressive results. This is something called a swimmer's plot. This shows you again all 48 patients, and it shows you the individual response for each patient and then how long they were on the drug. And the important thing to kind of see here is if you can see these codes, I know it's small, but you can see that patients are achieving stable disease after their first dose or after their first cycle of this onvansertib plus FOLFIRI plus Bev cocktail. And some patients are then continuing on the drug. And obviously, the longer they swim, the longer it means that they're on the drug. And then you can see they're getting partial responses and then complete responses. So they're getting response to the drug, they're staying on the drug. And that's certainly very encouraging to see. This is something called a spider plot. So there's a lot of terminology when you're talking about cancer. You have waterfall plots, swimmer plots, spider plots. This is called the spider plot. And what this does is show, again, all 48 patients and each patient's individual cancer lesion size over time. So it's very similar to the it's kind of a merge of the waterfall plot, which is their best response, and the spider plot, which is time. So this, the swimmer plot, which is time. The spider plot is response over time. And this really shows you, I think, the efficacy of this disease, of this cocktail of onvansertib plus Bev plus FOLFIRI. You know, you could see the vast majority of patients starting at the initial dose are having shrinkage in their tumors and maintaining that shrinkage for extended periods of time. Only one patient really had, absolutely, no response at all. So I think that spider plot here is impressive. So quick summary, 35 or kind of like low 30 response rate, which compares very well to some of the PubMed that I showed that showed response rates are expected to be only in the teens. And then patients are getting a long response and they're staying on the drug for periods of time. And when you look at the analysis of that data, you come to the progression-free survival, which is what patients really want to know. You want to know, obviously, who's going to respond to the drug, but what you really want to know is that halting their cancer, and are these patients living progression-free? And what the company has found so far with this data is that the average patient, or the median patient, I should say, is having progression-free survival of 9.4 months. Now, again, we come back to this table that I built that shows you the existing options out there right now, and you could see nothing even close to 9.4 months. The TRIBE study was only 5.6 months. Lilly study, where they used a drug called ramucirumab instead of bevacizumab, 5.7. And you can see other drugs where they've swapped out the chemotherapy. The only other trials where they swapped out the chemotherapy, only 6.1, 5.7. And even in some of these studies where the patients didn't get bevacizumab in the first line setting, they're only getting progression-free survival of about 7 to 8 months. So what Cardiff is showing in their study so far at 9.4 months is, in my opinion, impressive. It's far above what the literature expects that these patients are going or should be, achieving. But clearly, meaning that, in my opinion, onvansertib is adding on top of the standard of care. Now, one of the knocks on the trial, or one of the knocks on the data, is that you have that kind of interesting dichotomy to where in the US, you may get bevacizumab in the first line setting. Outside of the US, it may not be that common. And if you remember back to the BevaColor study that was done in France, and that E3200 study that I said that was done in the US, bevacizumab adds about 10% if it's the first time you're getting the drug, and it adds about 3 months of progression if it's the first time you're getting the drug. So what I did is try to understand, okay, of these 48 patients that have been enrolled in this Cardiff study so far, what really should we be looking at in terms of the response rates and the progression rates, knowing that maybe not all the patients got bevacizumab in the first line setting, and it was about a third that did not. So what I did is I just did some simple math to try to get a sense of if you got bevacizumab in the first line setting, you maybe should have got about a 13% response rate. If you didn't, and you got it in the second line setting, you should have got about a 25% response rate. And I multiplied that through, and I found that the benchmark for what I would consider success of this trial was about 17%. And so the way that we kind of look at cancer drugs, or the way we look at clinical relevance, is we take what maybe is the standard of care, and we say, if you can do 30% better than the standard of care, you probably have a drug that the FDA is going to improve. So at 30% improvement over standard of care of 17% is 22%. And so if it did better than 22%, I think you can feel pretty confident that onvansertib is adding response. And recall, you've got 34%. So we're well above the 22. That's kind of like the hurdle for, okay, is this drug really adding response to patients? The other thing we can do is we can do the same thing with progression, because progression is really what the FDA, it's nice to see response to the drug, but what the FDA and what patients really want to know is this to keep you alive. And so you kind of do the same formula where you look at what should be your progression in the second line setting. If you're Bev naive or you're Bev experienced, it should be around 7 months, a 30% improvement, meaning if you can get 8.5 to 9 months, then it's pretty clear that onvansertib is adding value to this. And again, they showed 9.4 months. So on both the measures of efficacy, the response rate and the progression-free survival rate, I think you're seeing data that suggests you're well above what is considered not only meaningful, but there's a really good chance that onvansertib is the result or is the driver of these data. So that's where the company is right now. The next steps are essentially to continue this phase 1/2 trial. They've enrolled 48 patients. They ultimately want to add another 50 to get up to 100 patients. They want to go talk to the FDA, or basically present these data to the FDA in the second quarter of 2022. So hopefully within the next couple months, they'll go talk to the FDA, and they're going to sit down with the FDA and show them these data and come up with a plan for a pivotal study. And a pivotal study is essentially the study that you do before you submit the data to the FDA. So this is a phase 1/2 study. They need to do one more study after this, confirm the results that they're seeing, and then submit that to the FDA and the EMA essentially to gain approval. So the timeline on all this is go talk to the FDA, hopefully within the next month or so, provide an update to investors maybe in the third quarter, and then start that study in the fourth quarter. And what I'm thinking, and I this is not directly from the company, this is just my thinking, is that they will do a study that's pretty darn similar to some of those studies that I talked about, the RAISE study at Lilly, or the TRIBE study, or that E3200 study, or that EAGLE study that was done in Japan. 500 patients or so, second line setting, FOLFIRI plus Bev plus onvansertib versus FOLFIRI plus Bev. So a true randomized head-to-head study that will tell us yes or no, does adding onvansertib in the second line setting, add value. And again, based on the data that I'm seeing from their most recent update and the math that I've kind of walked through, I think the answer to that question is yes. Why is the stock at 250? If I think the answer to that is yes, I think the market really wants to see that agreement with the FDA. Not that I think there are any hiccups to that agreement. Like I said, there's some nuances in exactly how the front line is treated, whether it's FOLFOX or FOLFIRI or FOLFIRINOX or some modified version of that chemo. But if they can come to an agreement with the FDA on this is what the patient should get in the first line, this is what they're going to get in the second line, then they could go out and they can enroll cancer centers and hospitals that will just adhere to that protocol. And I don't, in the US, I don't see a problem with that at all. It'll be, I'm not saying a challenge, but I'm not as familiar with Europe and how that process works, but I don't really see that as being an issue either. Usually what you do is you go talk to the FDA, you get a protocol design from them, and then you show it to the EMA. You can do it the other direction as well, but you get an agreement with the FDA, then you go show that agreement to the EMA, and they go, well, change this, do this, or yep, we're on board with that. And as long as you have a protocol agreement, then you could go to hospitals and centers all throughout Europe and hopefully just do one big, global study that gets you set up for approval. So I think, right now there's questions. If you say, well, how, when is it going to start and how much is it going to cost and what exactly are the endpoints going to be? I think that's the kind of stuff that we'll hear about in maybe a few months. But there's nothing when I go through the progression of this is how much I think Cardiff has plenty of cash. And I'll talk about that in a second. And, we're talking about answering these questions, maybe this summer or maybe early in the, early in the second half of the year. So, maybe August or September. So that's really not that long. And then you get that phase 3 study up and running. And I think when people see that, they're going to understand that, this has a really good chance of succeeding. And it's a fairly sizable market opportunity. This is where we are right now in the phase 2. So just real quick, I know I've been talking for a long time, but onvansertib is a drug that again works in synergy with DNA damaging agents like irinotecan. There are other agents that it probably has some synergy with, the PARP inhibitors, DNA damaging agents in the PARP inhibitor family that would seem to make sense. We're actually going to see some data from some preclinical studies of the combination of onvansertib and PARP inhibitors in ovarian cancer at the AACR meeting, which is taking place in the US in the middle of April. And then they're in a phase 2 study for both castrate-resistant prostate cancer when they're combining the drug with abiraterone. And they're also looking at the combination of the drug with Onivyde, which is a liposomal formulation of irinotecan in pancreatic cancer. And that's a significant unmet need. Pancreatic cancer is, I believe, has the worst outcomes. I don't know if it's pancreatic or liver, but both those diseases have really abysmal outcomes. In colorectal cancer, I told you the 5-year survival rate's only 10%. For pancreatic cancer, I don't even know that it's 1 or 2%. So pretty significant unmet need there. And again, the chemotherapy is irinotecan. So there's a really good chance that we'll see some interesting data in the pancreatic cancer setting. And we should see that data in the third quarter of this year. There's a big conference called the European Society of Medical Oncology that will take place in the third quarter. And I would expect that we'll see some updates there. So there's some nice kind of updates that should be coming from the company. You got the FDA meeting, then you have a telling the investors what happened at that meeting. And then you've got obviously the data from ovarian that seems kind of interesting given the combination with PARP inhibitors. And then you've got two other, pretty sizable indications, pancreatic ductal adenocarcinoma. We just talked about that. And then castrate-resistant prostate cancer. So again, I think there's a lot of interesting synergy here in those two indications. Real quick, let's just talk about their cash position, because this is a biotech company and people always want to know, do they have any money?
Yeah, exactly.
And so the thing that I think is the most interesting about Cardiff is you can buy the stock right now for less than the cash that it exited the year. The market capitalization of the company right now is about 110 million, and that is really small. And so I want to make sure that people understand this is a micro cap biotech stock, so it's got a pretty high risk. Risk level, but it's got, in my opinion, a great reward level, because you're buying the stock for less than the amount of money that they exited 2021 with. They exited 2021 with 141 million on the books, and the company is being valued today at only about 110 million. Now they burn 8 to 10 million per quarter. So even if you said, well, obviously they're trading less than cash at year end 2021, but they're going to burn cash. Well, even if they burned 30 million in 2022, which is probably what they'll do, you're still ahead of the current market cap. So you're really buying this thing right now with at the floor valuation of cash, or even projected forward cash. And one of the most interesting aspects is that in November of 2018, now this was after the interesting data that I talked about in the fall. Remember I said I liked the stock at $5 in the fall. And after I said I liked it in the fall, Pfizer came knocking in November and gave these guys $15 million. And it's obviously they listened to me, right? So now $15 million is not a lot of money if you're Pfizer. If Pfizer's they're making so much money off of their COVID vaccine and their COVID small molecule that $15 million is chump change. It's probably laying on the floor in the hallways around there, but it's pretty meaningful to Cardiff, a company obviously that has an asset that's completely unpartnered. And one of the things that I thought was interesting is, the investment that Pfizer made at $15 million was at $6.22 a share. And this stock right now is at $2.50. So you can buy the stock at $2.50 and be in, what's that? 60% below what, the guys at Pfizer put an investment in this company, and they have a business development team of 150 people. So they did a lot of work looking at this asset, and they thought at $6.22 it made sense to throw 15 million. Now again, 15 million, not a huge amount of money if you're Pfizer, but I do think it's interesting that Pfizer did something like this in 2020, where they put a small amount of money into Trillium Therapeutics. It's a similar kind of story. One asset that could kind of be pan targeting for advanced solid tumors. And most people, kind of looked at that 25 million and they said the same thing. It's 25 million. It's absolutely chump change. Well, they did that in September of 2020. And then in August, 11 months later, they came back and they spent 2.26 billion to buy the whole rest of the company. So I'm not out predicting, that Pfizer is going to buy Cardiff, tomorrow or, at any point in the near term future. But there's a precedent here where Pfizer puts in a small amount of money to kind of keep themselves interested and aware of what's going on. And then if they like the story and they feel like the valuation is attractive, there's precedent to suggest, they'll come back and buy the whole dang thing. And so in conclusion, what do I think this stock is worth? I told you it's currently trading at $2.50. Well, if you go through the progression of the size of the market, like I said, about 150,000 new cases of colorectal cancer, 50,000 or so, about a third are diagnosed with metastatic disease. They have that KRAS mutation, which is the specific mutation that the company is going after. And the reason they're going after that is because it's the most unmet need. Remember, if you have a KRAS mutation, you don't respond to one of the most effective drugs in the first line setting called cetuximab. So 50%, right? So we're whittling down to a target market of about 15,000 patients that are going to make it to that second line setting. I think a drug like onvansertib could cost $20,000 per month. That's pretty similar to what other targeted oncology drugs cost. And that could get you to peak sales in the US of 500 million. I conservatively forecast outside the US sales of another 250 million. And when I throw that into a valuation model, I think onvansertib in second line metastatic KRAS mutated colorectal cancer makes the stock worth about $8 a share. So it's trading today at 250. And I think just the indication that I talked about today makes the stock worth 250. And like I said, they've got these other things that we've talked about: prostate cancer, pancreatic cancer. We're going to see some data in ovarian cancer in the middle of April. So all those other things, if you incrementally think about the sales opportunities in prostate cancer and pancreatic cancer, all told, I think this stock is worth $10 a share. So it's a high risk name. It's a biotech company. So obviously it's for risk loving investors, but you're buying it at cash. And I think if this thesis plays out, you've got at least a $10 stock and potentially, more. I think my assumptions here are rather conservative. So that's why I like the stock. I think the drug works. I think we're going to get improved visibility on the path to market probably within the next several months. And I think it's way, way undervalued. And I've got a $10 target, like I said, on a 250 stock. That's a heck of a nice return.
Okay. So yeah, I think you explained everything pretty clearly. It was quite easy to understand, even for me that I'm not in the biotech field. But yeah, so the interesting thing in this company that I see, so you don't see risk of dilution for the investors until an FDA approval. Is that right?
Well, I don't know about it until FDA approval, because they are going to have to do a phase 3 study, but with 141 million on hand as of the end of last, right? We're at March 31st, so they'll report their first quarter, but they probably only going to burn about 6 to 8 million here in the first quarter. So let's just say they have 135 million, pro forma on cash right now. That should get them well into 2024. I mean, the company has made it pretty clear that they have no intention of raising cash at this level. They have enough cash to talk to the FDA. They have enough cash to present additional data in prostate and pancreatic and ovarian cancer. They have enough cash to present additional follow-up data in colorectal cancer, and they have enough cash to start that phase 3 study in hopefully the fourth quarter of this year in colorectal cancer. So when we get in, when we get answers to those questions and we get into 2023 and they have, maybe now around 100 million in cash, which is, like I said, not much more than the market cap, then, we'll see. The stock is 250. Obviously, it'd be pretty painful if they went out and raised, money at 250. But, if my thesis plays out correctly and the stock goes to $10, it's a lot easier to raise 100 million at $10, right? That's 10 million shares, versus 40 million shares. So, it's possible we'll see some dilution in 23 or 24. But the interesting thing that I think about the story is that Pfizer relationship, right? So if, Pfizer may take a look at this and just say, we want it. That's what they did with Trillion, is they just said, well, we're just going to buy this whole thing and we're going to fund it ourselves. And then so you don't have to worry about dilution. I see no risk of dilution in 2022. And hopefully by the time we get into the start of that phase 3 study, the stock price is a lot higher. There's a lot more visibility. And, either that issue takes care of itself because Pfizer, licenses the asset, or funds the study, or the stock price is a lot higher, and going out and raising another 100 million to complete the phase 3 is not not painful.
Okay. So I think you made everything pretty clear. So thank you for your research that you have done and for being with us today. If you have anything else you want to add to this, you're free to do so. If not, I really want to thank you, Jason, for being with us today.
Yeah, hey, I really appreciate it. I was on your YouTube channel. I think you do a great job, and you're a hustler. I like that. The only thing I'll say is, if you're interested in independent biopharma research, please visit my website, bio5c.com. It's a low monthly subscription. I do analysis like this on 100 different stocks. I manage a paper portfolio. I've got a chat board. I'm available to message with subscribers all day long in that board. And it is really, I'm a former buy side and sell side analyst. So it's institutional quality research, but I try to make it clear for everyone, for retail investors and for professional investors. So if you're interested, please check out my service. So I appreciate that.
The link will be in the description.
Thank you.
It will be easy to find it. Okay, so thank you again for being with us today, Jason. This is it for today. I'm Giacomo. This is Hustle Hub. See you next time.